Hello there, it's James from EV3 Trade Signal Ideas. I'd like to invite you to my first presentation video on how the market's set up. It's Sunday, July the 4th, and this is the setup for the marketplace on the multi-asset sectors that I cover for the week ahead and what we have seen this past week. You'll see a very good overview as to the market presentations I give on a daily basis in the chat room at ForexFox. I've recently joined ForexFox, and I'd like to give a nice shout out to them as I'm very much very happy to have joined their team. So without further ado, we're going to start off by looking at one of my favorite indicators. It's my proprietary TriggerFlow index, or TFI. It will be identified as TFI just to save time. And the TriggerFlow index is, as I've written here, a proprietary indicator that I use to gauge the underlying net positioning in each market product I look at, be that an individual product or a multi-product cross-asset composite. In my thinking, this is a far too often overlooked component that helps immeasurably in assessing market psychology. Positioning never goes out of style. It's always there. So I find it very important, and it's a technique that a lot of people either don't know about or avoid, and deal a lot with momentum and whatnot. So I'm very much into cross-asset comparisons in a whole bunch of different ways, but also in the TriggerFlow basis as well. So without any further ado, let's have a look-see at the TFIs for the three major asset groups that I cover. Starting off in the FX world, I have these four FX pairs versus their respective TriggerFlows. We have the Euro-US, we've got sterling, we've got dollar-yen, and we've got a nice poster reflation currency pair, Aussie-yen. And as you can see, the blue are all their respective, blue lines are all their respective TriggerFlows. And these are 30 minutes, so it's reasonably long, but not terribly long. But it very much helps in understanding what the flow component of the marketplace is doing with the actual expression of price. As you see here, slightly bullish on the euro, bullish on sterling, bearish on the dollar-yen. So these three dollar pairs are all indicative of bearish US. So after Friday's non-farm payroll number, and we saw the sell-off in the US dollar as the number just wasn't as strong as the market had been hoping for, these currencies, as you can see, were going that way, dollar negative prior to the NFP. As for the Aussie yen, I very much like looking at this as a good indicator on the currency market for the reflation risk-on, risk-off world. So looking at, let's say, equity markets and whatnot, the Aussie yen is quite often a very good indicator along with it. Given the depth of the FX market, it's something that I think everybody should be looking at. So right now, this is in a neutral stance, as you can see. Relative to the others, it's much more neutral. Following that, we've got the equity CFDs versus their respective TriggerFlows. We've got the US 30, the Dow Jones, the US 100, NASDAQ, US 500, the Dow Jones 500, and the UK 100, the FTSE 100. So, I won't go too in depth, but as you can see them here, I'll let you look at that for a moment, showing the trend lines for all of those. Bearish for the US 30, bearish for the UK 100, and relatively in sync for the other two. So as I'll show next week in setting up of trade ideas and long-short pair ideas, this could be offering itself up with the UK as an example, UK 100 slightly bearish versus US 100 being, apparently quite bullish. So that might, I won't say right now, but that could be an idea between these two as being long US 100 and short UK 100. But I'll get more in depth next week in terms of some drill downs on a couple of sequences of charts for that. Following that up, going to be looking at the commodity CFDs versus their TriggerFlows. And again, similar to the other ones, show trend lines throughout. They happen to all be presently bearish, the TriggerFlows on their respective commodities. So dissimilar from the currency market where those three dollar crosses were bearish dollars, these are all actually bullish US dollars in terms of the inverted relationship between commodities and the US dollar. So I'll let you look at that for a moment. So blue lines, I'll always have that as my TFI, and it really does help me gain at least it gives me some comfort and confidence of what I'm looking at relative to where price ends up going. Following that up, another component of how I look at the marketplace is a regime or market theme identification. I think this is terribly important to look at it from a 38,000 foot perspective. In all asset classes, FX, equities, commodities, and cryptos, the following examples will be centering on the US dollar. I'm not just foreign exchange, but I will concentrate on the US dollar today just for example purposes. So starting off, showing off two model ideas that I look at constantly. I typically publish these on a daily basis, though they're not short-term charts. It's something just to be aware of on a continuing basis. The first chart, a 30-minute chart, shows the US dollar index, DXY, up against a rates and commodity composite, which is a yellow line, and a model built off of that composite. So the green and red lines promote these trade signal. This one's a sell, this one's a buy, and most recently on July 1st, there's another sell. It's a 30-minute chart, so it's not something that, in terms of being a short-term trader, I would promote that much. I do have shorter-term models, and if you come into the chat room, you're more than welcome to ask for shorter term models, and I'd be happy to provide those as well on an ongoing basis. So as you can see, this is a year-to-date performance that I show here. The return is quite good, and the hit-miss ratio and the profit factor and maximum drawdowns, I'm very happy with all of that. This has been running live or out of sample for about a year right now. As for the bottom chart here, this is a daily chart, and this is again DXY, the US dollar index, up against an alt market model based off the TriggerFlow. Again, I've highlighted that. The TriggerFlow here, it's a yellow line, and an optimized model built around that TriggerFlow. Again, green and red lines indicative of sells and buys. So very few signals. It's a daily chart, remember. Total of 8 trades year to date. Very nice hit-miss ratio. Profit factor, very good. Maximum drawdown, very negligible, and the return of 15.1%. So very happy with that. Using the alt market as we saw the Bitcoin market explode onto the scene and going up to 60,000 and change earlier this year as the dollar got hit. Very nice inverse relationship between the two. That's why I use it on a cross-asset basis. Following that up, continuing with the big theme of US dollar, I'm showing this up against the TriggerFlow index of both gold and silver. And I attach as well on this one an Andrew's pitchfork. I overlay a lot of charting techniques. It could be trend lines, it could be Andrew's pitchfork, it could be other in-house ones that I've built along with a TFI. And I really like the overlay of that because when they both go in the same direction, it gives me much greater confidence. So as you see here, big picture, this is an hourly chart, so it's not like day trading this per se. You see on the TFI of the composite gold and silver, again, those are inverted flows due to the inverse relationship to the dollar. This was coming off while this was making new high. I'm not saying that you should have caught it, but at least it gives you some warning. And so when you do see it in this acceleration down lower, this could give you confidence that it was going lower. Don't want to be a hindsight trader. That's the easiest game in town and really doesn't get you anywhere. But as we see here again, this was early riser, the blue, and the dollar eventually did catch up. What we're seeing now is opposite to what we're seeing on that long-term alt model I just showed you here. It is coming off here, the TriggerFlow index. So I've got to be very conscious of that. Because after the big sell-off we've seen in the dollar of the last couple of years, I don't anticipate it to be a strong dollar bid right away, but it could be. But I think it's going to take a little bit of time. Following that up, it is a dollar index versus the TriggerFlow of Bitcoin, inverted again, as I mentioned there. So this is a very typical sort of, this could be almost a standalone trade here, but again, bigger picture. This goes back about a year. On a 4-hour chart, And we're seeing here with regards to a simple trend line here off the tops, Friday prior to non-farm payroll, went up, tested it, failed. Will it go above there? It might. If it does, this is another in-house technique that I like to look at. I call it the price pivot point, target line. So if we do break here, it could go up here. But more importantly, the trigger flow on inverse Bitcoin is bullish. So we're seeing this bullish divergence. So bringing that all together, just being very aware of this trend line, that will be key. If we fail and this starts to come off, dollars offered again. But until different, in the back of my mind, I still feel the dollars bid somewhat. So with that, the next group of techniques that I look at are model ideas. I've got a lot of built-in models that a lot of them have been running out of sample for quite a while. And I deal in all asset classes, FX, equities, commodities, and cryptos again. And I as well present these on cross-asset, long-short ideas. I find that helps a lot. Different time frames. Some of them might be 30-minute charts. Others might be 5-minute charts. I try to give as much as possible as it offers itself up to cross-asset. Many trade opportunities do present themselves, and also cross-analytical opportunities. So with that, I will show you the different asset classes and the main models that I present on a daily basis. And if it's not daily for the group of the 4 per asset group, it will be at least 1 or 2 of them. In each of the charts that you'll be seeing on these model ideas, you'll see year-to-date P&L running total lines. So that's what these are. It will say relative to the trading amount, and you'll see the amount of the P&L for that. So here's euro, sterling, Aussie yen, and dollar yen, as I showed earlier on the trigger flows. So that's how it presents itself. Buy and sell, and at times when the stop loss or take profits have been triggered, you'll see a flat position. So right now, they all have positions, negative euros, negative sterling, positive yen. So the models are actually dollar positive, and with regards to Aussie yen, slightly choppy for that, which makes sense as it is choppy in itself. Following that up, the equity CFD model ideas, same idea. I won't go too in depth here. You can just have a quick see. In terms of the US, these 3 equity markets, they're all remaining bullish. They've caught that market very well, and as you can see here, there's an example of a close entry. That was a profit taken, or one of, this is a 2-factor model. So if they're not both going in the same direction, you're going to see a flatness in the market, in the model there. And on the UK 100, it's flat currently. Following up, the commodity model ideas, choppy as they have been, as you see gold here. So for the last 3 weeks, been very choppy, in and out. US oil, there hasn't been a position. It was flat from there. But again, I'd rather be flat than being short in the wrong market. So obviously missed the $70 to $75 move in US oil, but not the worst, none the worse for that. Gold based in euros bid right now, and we've just got a recent bid in sterling US. Finally, in the model world, here are the crypto model ideas. These are hourlies as well. I have it for Bitcoin, Ethereum, Litecoin, and Ripple, XRP. So you can have a look-see. Same methodology of presentation, year-to-date P&Ls for all of these. Obviously, incredibly volatile. The crypto markets and the returns are commensurate with that. These have been running out of sample since the beginning of April. So again, very happy with all of these. But the returns have been so good, as you can see. Do I think there might be a reversion back to mean? Yes, but at the same time, I think that the volatility is going to be here for quite a while, given the state of the world that we're in. Finally, in terms of presentation methodology, here's a standalone trade ideas. I offer these on all asset classes. So individual products basically is what I mean by standalone. And this first one here is a EURUSD versus its trigger flow. So again, bringing in the trigger flow, showing a lot of that this first presentation, because I really want to highlight, give the sense of what it looks like, proprietary nature, but just understanding that it gives the underlying positioning flow of each respective product that I look at. Not always itself, but it could be a cross asset, like dollar against the inverted gold and silver as an example. In the euro on a 60-minute chart, again, be patient about it, but use alternate terms, techniques. So again, trend lines, very important. We have just recently seen it broke down there. It's come off dramatically. Whether or not I've been short, that's another story. This is a big long-term chart, but again, to give a help in terms of a miniature regime analysis on this. So here's a trigger flow, the blue. Again, as I say here, how it behaves here at trend line will be key. Do we stay below it? Do we go back above it? And similarly in price line here broke down. We'll see how we behave coming into post July 4th holiday trading. Euro yen, big cross in both of these. This is interesting as we see a very, very large bearish divergence, came off early, starting to come off. Price broke this trend line, failed up there. Now we're at this level. I've highlighted it again, as I do on a daily basis. I've got trade ideas out there all the time on standalones or on currency pairs, cross assets. You'll see it if you come and join in for the 7-day free trial. You see that the TriggerFlow index has broken down through its support line. And if we start to see this break down through here, I think you could see a lot further movement to the south in the euro yen. Finally, in terms of the standalone trade ideas, sterling Swiss, another one very similar to what I just showed there on the euro yen, right up at trend line. Again, my proprietary key pivot point price line at 126.95. This will be a very much of an inflection point area. It could go higher, but if we start trading down through here and we can remain with this bearish divergence, I think you could see this cross tumble dramatically. So that's something, early warning, highlight this. Do I put a trade on? I could with some stops up here, but I'd like to see it come down here first, maybe fail up here again, and then boom, if we see this divergence. So as I show over here on this one, in October, we really saw this go up much quicker than what we did see spot, but yet spot did eventually catch up to it. So that's it for the overall presentation on what my presentations look like in the different asset groups, and as well the methodology of presentation of my analytical ideas. So next week, as I've highlighted a couple of times, long short pairs trade idea, I'm going to go through the construction of a couple of ideas to give a better feel for that. Next week's presentation will not be nearly as long as this one, so trust me, I'm going to try to keep them to about 5 minutes, so you won't have to wait through it as long as you did today. And so finally, I just wanted to say you can follow my daily market analysis at Forex Fox, and you can sign up for a free 7-day trial at community.forex.com. And all of my videos, starting from this one, will be available on my YouTube channel at EV3 Trade Signal Ideas. Thank you very much. Have a nice day, and hope to see you soon in the chat room. Bye-bye.